Hello everyone. Today we're going to have a brief market recap, then talk about today's U.S. non-farm payroll figure. Then I'll run through today's trading ideas. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my opening market comment. Well, the dollar was higher overnight as U.S. interest rates gained slightly. The Cleveland Fed updated a study of what the Fed funds rate would be under a variety of monetary policy rules. And the median is 2%. The median that it came up with is 2% by the end of this year. ECB chief economist Peter Pride also helped the dollar by casting doubt on whether there was a sustained adjustment in EU inflation towards the 2% target. On the other hand, the sterling plunged on a dovish Bank of England meeting. The bank yesterday raised its growth and inflation forecast as expected, but maintained its neutral stance and emphasized the continued uncertainty from Brexit. That caused the pound to plunge. Oil prices rose as tensions between the U.S. and Iran flared up again following Iran's recent missile test. As for today, it's non-farm payroll day again. This is generally the biggest indicator of the month. Now, today's figure will probably be of less importance than usual, however, for three reasons. First off, this isn't the indicator that's restraining the FOMC from tightening further. Inflation is the limiting factor nowadays. Secondly, the committee probably wants to see U.S. politics settle down and particularly wants more clarity on the administration's fiscal plans before hiking again. Finally, there was just an FOMC meeting 2 days ago. The data would have to be significantly different than what we've been seeing recently to outweigh the view that the market got from the committee. I expect less volatility than usual around today's number, unless it deviates significantly from the forecast. Now, the market consensus is for a rise of 175,000, up from 156,000 in the previous month. Most of the forecasts are between 162,000 and 2,002. But the ADP report on Wednesday showed a rise of 246,000. So some market participants may have raised their personal forecasts. I think a figure that's lower than the consensus might disappoint the market a lot. But on the other hand, it would take a significantly stronger figure than expected to cause people to rethink their rate expectations and therefore bid the dollar up. As for the other figures being released at the same time, the unemployment rate's expected to stay at 4.7%. Average hourly earnings are expected to rise at a slightly slower pace, while the average work week is expected to stay the same. That would tend to be negative for the dollar, and that the Fed wants to see strong demand for labor spilling over into higher wages. Now, shortly after the employment data are released, Chicago Fed President Evans will make a speech. He's a voting member of the FOMC, and this is the first public comment from an FOMC member since Wednesday's meeting. Evans favors 2 hikes this year, apparently, although he said earlier in January that 3 hikes is not implausible. Any change in his view would be quite significant for the market. As for today's trading ideas, well, you can take a view on the NFP. As I said, the market estimate is 175, but following the strong ADP report, there could be some disappointment if it comes in below that. On the other hand, it would take a significantly stronger figure to raise Fed rate expectations following Wednesday's FOMC meeting. Do you think it will be higher or lower? Take a punt. But remember, positioning ahead of the figure basically is just betting on a random outcome. You might want to wait until you see the figure and then come in with a trade. Secondly, as for my other idea, I think sterling may continue to weaken. The market view on sterling has been improving recently as so many of the country's economic indicators have beaten expectations. However, yesterday's Bank of England statement changes the outlook for UK rates. I think sterling could weaken further as the market adjusts its positioning. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.